let's jump into the charts and kind of explore what's wrapping up this week. A bit annoying because all through the night the market was getting weaker and weaker and weaker, and as usual, some bromides were thrown out about things would be fine with China. So everything bottomed like at midnight. It's been climbing ever since. So, we've gone from solid red to, ES up 44 points, NQ up hundreds of points, YM up hundreds of points. So the V-shaped bottom, whatever the time span, any drop gets bought. And the only one with any red left at all is the small caps RTY. But here on the spider on this chart, we can see that it has spent the entire week just banging around inside the confines of the range on Friday. This one day is a superset of every single tick that's happened this week. We're just trapped, banging inside of this little jail cell. Cannot make up its mind. I mean, as time goes on, you sort of miss the data really badly, like we have no CPI, we have no PPI, we have no unemployment data. We've got nothing. Next week, that'll change only in as much as corporations will do their quarterly data, which the government's also trying to get rid of because CEOs don't want to bother. And that'll probably happen too, which will make things a little less exciting because, quarterly earnings kind of things get exciting again and interesting. What if they cut that to like half a year or annual? I'll just be sitting around just making stuff up, waiting for the truth to come out. So for the moment, we still have quarterly data. And it'll kick in with household names next week because, like I said, I don't care what JP Morgan's numbers are or Goldman Sachs or anything. It's boring. But Tesla, Amazon, Apple, yeah. And of course, NVIDIA way into November. They like to wait. The cubes have also continued to bang within that Friday range, going nowhere fast. Lots of smoke, zero fire. And the semiconductors themselves, by way of SMH, continues to linger roughly at this 345 level, just hanging out. There seems to be like there's a magnetic draw to that level. As far as IWM goes, as I mentioned, this still is showing a little weakness. We're down 0.56%, which constitutes a crash in this market. And we are below the trend line again. So we've been at lifetime highs on Wednesday, and we're in the vicinity of the week's lows. Not sure why the small caps are particularly weak as opposed to its bigger compatriots, but it is. Emerging markets have been playing jump rope with the trend line. Oh, look, it moved. I try to move them back to the right place before the show. It takes a long time. It's very tedious, and they still like to move. So we'll just adjust that accordingly, and that'll hold on for a few moments, I guess. So, yeah, we're above that trend line now. That is properly placed. And so this is the big plunge, and we've been trying to undo the damage since then on the emerging. So let's turn our attention to the one real action of the day, which is precious metals. Here's gold. And this is the biggest, baddest red bar we've seen in many, many months. I mean, our record on this may date back to April. So even in this distance, you can see this is a huge standout. No, buddy. So interestingly, a lifetime high today. It's kind of like equities last Friday. A lifetime high and a huge plunge. So the front month is down $68. And that's big enough, but like I said, it's in sharp contrast to the strength it was showing not many hours ago. And this has, I mean, if this, we've dropped before and it hasn't meant a thing. Like here, for example, there was this drop back on the 9th. It didn't mean a thing. 2 days later, it was flying higher than that. This could be the exact same deal, or we could start breaking it down. And the more it breaks down, the more freaked out people are going to get, because there are some parties that were paying $4,300 for this, and as it cuts through potentially all this up motion, you're going to get a lot of fear morphing into panic by those who bought at those levels. So bearish engulfing pattern, yes, it does not necessarily mean that that's it, that's the end. It's really a question of, is this just a one-day pause, or could this be a multi-week diminishment in prices? I'm hoping for the latter. Here's silver, kind of the same idea. Lifetime high today, huge drop today, 5.33%, which is really massive for this. Here again, this is just eyeballing it real quick. This looks like the biggest plunge since April 4th. So it's been a good half year plus since we've seen a movement of this size. And in turn, SLV, silver, because its trading hours are more limited than the futures, you don't have the same experience. You don't have the lifetime high that the futures are illustrating. That high remains as of yesterday, but we've undone the gains from Thursday, the gains from Wednesday, and most of the gains from Tuesday. So SLV itself down over 5%. So with all this happening, naturally, the miners are taking it on the chin. They've been very strong, but GDX is down over 7%, and its lifetime high was just yesterday. And it's been less consistent in its rise versus just plain old gold, but it's the exact same story. If gold and silver illustrate that this is not some one-day anomaly, that they actually are going to backtrack for some weeks, the miners are going to just get diminished. I was really tempted, but I didn't yesterday, although it would have worked out nicely, to buy dust. Dust is I think triple, at least double, I think it's maybe 2x bearish against miners. And it got down to like 8.40. But there was nothing about the chart that said buy me. It was just like down hard, down hard, down hard, day after day. So I didn't do anything. But with all this happening, we had a big bounce on dust like. So it's up 14.5% today alone. But, over the long haul, these leverage instruments are just like a vicious ski slope. I mean, they do nothing but go lower. So you get these little pops now and then. And this is definitely one of them, because the precious metal sell-off is a bit of a surprise. Of course, we can't go through precious without mentioning palladium. PALL is down almost 10% just today. Plus, it's got a very nice island reversal gap right here. This poor little bar from yesterday, all by his lonesome. His low is higher than the flanking days, Wednesday and Friday's high. Thus, an island reversal gap. And so, if I may offer my wishes, what I would love to see this do is get down to, under 120, somewhere in the range of that setup. Just get this stuffing knocked out of it so it becomes an appealing buy again. As far as shorts go, so yeah, as I said, we're, up hundreds of points on the YM and the NQ, and up, 44 points in the ES. But in spite of that, it isn't too, it's a funny thing. I have two big portfolios I deal with almost purely shorts, and they have different personalities. Although it's not like, all the semiconductors go here and nothing like that. It's just a random mishmash. But for whatever curious reason, one of them tends to do much better than the other on a given day. And it flips who does better. So like, as I'm glancing over at this, one portfolio of the 14 positions, it's like 6 are down and 8 are up. Not that great, but not too terrible considering. The other one, like almost everything's down. Probably just dumb luck. But by and large, more shorts are down than up. So that's not lousy considering what a green day it is. Some of those are Carvana, which is down about 3.75%. I mentioned this one recently. Lumen, this one I brought your attention to because it had this enormous plunge bounce and attempt at a bullish breakout, but it seems to be failing. So that one's down 2.35%. W, which is Wayfair, down just a little, 0.2%, but a pretty clean setup. We've got Delta, DAL, which is also down about 0.2%. Then Corning, GLW, is down about 2.5%. I must say, I got out of Oracle yesterday, which is a shame because I think it's down like 7% today. Oracle's been very spastic lately, so it's become very tricky. But that was a nice tumble that I did not partake in. Kohl's, KSS, is down almost 2%. The chart looks very boring, but it's a really interesting long-term setup, as you can see there. There's also Micron, which is down just a little. But if semiconductors weaken at all, I think this would be one of the first to tumble hard. It's hanging out at lifetime highs right now. Another semiconductor is ON, which is actually down today 1.11%. And one last one, I even though I didn't buy dust and I didn't short GDX, I put my toe halfway in the water by shorting yesterday XME, which is metals and mining in general, but a lot of precious as a component. So it's not as lusty a drop as GDX, but it's not bad, 4.18%. And I'm going to hold on to this one and might cover if it tags this trend line. But as it is now, sticking with XME. So just a few moments left. Let's just look real quickly at the big equity futures. So the ES, similar to the spider, no surprise, wedge is cleanly broken, and we have just been messing around here all week long trying to figure out what to do with itself. So it's pretty much dead in the middle of that bar from Friday. The NQ is up rather strongly, but it's the same deal. Within Friday's activity, no real clear direction. Red, green, red, green, red, green. I mean, there's no Christmas tree that's reliable. It's kind of comic if you look at it, just how amazing that is to just flop every day toggle like that. So I guess it means a red Monday. And then finally, RTY, which is actually managing to be down a little bit, 0.2%. And in this instance, this giant cup with handle pattern is still intact, strikes fear in the bearish heart, but it's looking a little wobbly over here. So we'll see if that actually breaks down or not. So thanks for being with me. You have a good weekend. And I'll see you on Monday when we can welcome the real earnings season.